All the motherfuckers talking about she keep ain't no hitter, she keep ain't this, she keep a fake. Shut the fuck up. Y'all don't deal with that nigga. Y'all know that nigga got caught with the right shit. Shit at the police and shit. Nigga better probation is fucking, I don't know when. Motherfuckers not fucking playing them like that. Them niggas savages out there. If I catch another motherfucker talking shit about GT, I'm fucking beating their ass. I'm not fucking playing no more. Y'all niggas go a little greasy and young.
Ferraris and Rovers, these are the Sosa. Hit on with that Cobra. Now that boy's on Dover, they do it like that Sosa. Some robots. Fuck off. Fuck. What's up, guys? Welcome to another... Sorry. Okay. Okay. Welcome to another trade recap. This is my life. Is it comfortable now? Can I start? You wonder why my room's a mess. It's not because of me. It's because I have a wild fucking animal in here. Back at it. Wonderful. Anyways. Let's get into this. Perfect. Welcome to the trade recap, boys. So, we made some bread today, and we also had news. So, first off, let's talk about what news we had today. Let's go back to, what day is it? So, today we had bearish news for the S&P, right? Greater than forecast, good for currency, bad for the S&P, right? Because we know when DXY goes up, the S&P 500 goes down. So, what we obviously waited for news to come out. News came out at 1500, so right here, okay? When this happened, right, this is when news came out, so I waited till this time. Before then, we already saw that we had a break of structure on the 15-minute time frame. Okay, we got a break of structure on the 15-minute, giving me a bearish bias on the S&P. Okay, I know we didn't have much on the hourly to give us a bearish bias. However, I'm perma bearish on the S&P just due to multiple reasons. All right. Continue. God, there are going to be some memes about this video. All right, continuing. I'm perma bearish on the S&P 500. I will not be looking, if I'm bullish bias on the S&P 500, I'm not looking to trade it. Okay, why? Because we've been rallying for so long. Another reason why our economic climate is not looking the greatest fundamentally, but technically on the chart, we're fucking booming. And that should be a red flag. Fundamentals are saying bear, but technicals are booming. That is not a good sign. Okay, this is the monthly high. My guess is we, over the next 2 weeks before this monthly candle closes, we come back down here, and this is one big liquidity sweep to go lower. That's just my prediction. Could very well be wrong, but for now, up until those 2 weeks pass, and until we see what happens, that is what I think will happen. So I had a bearish bias on the S&P for that 15-minute break of structure. We also, just pushed past these hourly highs, and then we get a 15-minute break of structure. Liquidity sweep on the hourly, break of structure on the 15. Makes sense. Okay, so what did I do? I waited for news to come out. News comes out, pushes up into schmink. Pushes up into this little 1 minute liquidity area right here. Okay, boom. And then we also had this 1 minute fair value gap, which I had marked out. Something like this. Okay, we made it kind of more exact in our later drawings. But essentially, I entered a little bit prematurely. And to be honest, I shouldn't have. I entered when... Where did I enter off of? Okay, this is where I entered off of. I saw that we swept this liquidity, okay, and then we come down. We don't break structure off of this, right? But we take out these lows. So I'm like, okay, we're getting some bearish momentum. And then we came up into this 1 minute fair value gap, and then we had a reaction off of it, and that was what I entered off of this candle close right here. Okay, and then my stop was not actually here. It was up above this high. Okay, and then we moved it above here once we started trending lower later over here. But anyways, I entered off of this because we had 15-minute break of structure to the downside. We had hourly liquidity sweep, 15-minute break of structure. We're, high time frame, fundamentally bearish, and we get high time frame confirmation of bearish market structure getting broken. We scale down to a lower time frame. We see a liquidity sweep. We see a fair value gap get filled. We don't see a break of structure. I entered prematurely, and I shouldn't have for this reason exactly. Okay, so this is going off of that bootcamp video from yesterday about how we can improve our wins. Okay, so... if I had waited for a break of structure, we would have been able to enter off of this candle, kept that same stop loss, and had a much better entry. Something to learn from, okay? But that's not what we had. We entered off this candle instead. Stop was right up here. Okay, our first take profit was right here. Shitty risk to reward. Let me tell you something. When you are sitting, waiting for a trade to hit after... How long was this? See, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. When you're sitting there for, what's 5 times 12? Okay, yeah, when you're sitting there for over an hour, on a trade that you took on the 1 minute time frame, you're willing to just secure profits and move your stop loss to break even after sitting in that trade for that long. At least trading on a small time frame like we were. So that's literally all it was. I said, okay, well, there's an area of liquidity here. This is a valid area to take profit anyways, and as you can see, it was. And, you know, I was just willing to close 75%. And that was another reason. I closed 75% because I knew it was a shitty risk to reward. And I knew that, you know, odds are if we hit take profit 1, the likelihood of us coming and hitting take profit 2 without getting stopped out of break even are relatively low, but I'll at least leave 25% for runners. So that's what I did today. Okay, that's what I did. I shorted off of the reasons that we mentioned before. Okay, we ended up trending lower. I ended up moving my stop to above this high once we started breaking structure again and rallying lower and took out these lows, because I was like, okay, if we end up coming back up here again, it's just going to be a full reversal. Okay, if we end up taking out these highs, it'll be a full reversal, and that never ended up happening. So, boom, take profit 1 was hit. I made $17,433, okay? I took off 75% of my position, and then the remaining 25% got stopped out at break even right over here. As we can see, our bias was still correct. The remaining take profits ended up getting hit just a little bit later. That's enough for me. That's enough confidence for me to know, like, hey, I actually know what I'm doing in these markets. Cool, right? If anything, you know, like just seeing your further take profits get hit, it's just more of a confirmation, like, hey, we know exactly what we're doing in these markets. Cool. And that's what we like to see. So yeah, with that being said, today was an okay day. Price was taking its time. We had news literally this entire week, so it was hard to maneuver. And honestly, I risked pretty heavy today just because today was the lightest news day besides Monday. And on Monday, I didn't make much. And if I'm being honest, I was kind of betting on myself that I would be able to make back what I lost on Thursday and some, and that's what we did. So cool. We made hella bread today. Awesome. And yeah, that's that. How I could have improved. Could have waited for this break of structure. Could have entered off of either this candle, breaking structure right here, or wait for even more confirmation. This candle breaking structure, fair value gap getting filled, and then a rejection, which essentially would have given you the exact same entry as the break of structure, but a little bit more confirmation because we get a break of structure, we get a fair value gap getting filled, and then we get a rejection off of it. Bling blow. Look at my neck. Just like that. And that would have given us a way better risk to reward ratio for take profit 1. So that's something to learn from. You know, make sure you wait for your confirmations. I was just kind of getting a little bit restless over here. Ended up, you know, betting on market intuition and not off of just like price action. I do that sometimes. Ended up biting me in the ass this time. But hey, money is money. We made money today. That's the trade recap for today. Remember, boys, there is a U.S. bank holiday on Monday. So do not fucking trade on Monday unless you're trading like GBP, JPY. But even then, the Forex pairs, USD affects the entire market. You ever notice that when there's a US like announcement or like big news drop for US folders, it still affects the Forex market? Same shit with bank holidays. If there's low volume for the US, if there's no volume for the US, it means there's going to be low volume for all these other currency pairs. So I wouldn't really be looking to trade GJ. I wouldn't really be looking to trade GJ or really anything on Monday. So that being said, hopefully you guys learned something from this. Hopefully y'all enjoyed it. Stay blessed. Stay up. Hopefully you guys have a great weekend. I'll see you boys in the boot camp video. Peace.